Hello, Andy Tanner here. Welcome to Mentor Club. I'm joined by Noah Davidson. How are you, sir?
Fantastic is the answer to that question, always.
Fantastic, always. The market closed today for a
Yeah.
United States holiday, closed today, but we are checking out some futures. Futures a little bit down, so we'll do some prep uh, for that. But whenever we do Mentor Club, we do our disclaimer that talks about education as the only purpose for Mentor Club. That's it. No legal advice, no accounting advice, no financial advisors services. We use a simulated account for illustrations. So there's transactions that we use to show how things can be done, but we don't say, oh yeah, this is our recommendation. And where it says no warranties implied at the bottom, boy, that's a good one because I don't know how to predict the future and I'm wrong a lot. So when I go on some run where I'm not wrong anymore, then maybe I'd start warrantying stuff. But I'm as of this recording, I am wrong a lot. So basically, the message is there's risk, and to put money out there, you can put it at risk, and so that's a decision that an individual makes, and they do it with whatever team they feel they should do it with. So with that, let's talk about. You want to start with the futures and
Well, yes.
talk a little bit
Let's
about that?
talk a little about how that's working. So the markets are closed, but the futures do trade, and so we are actually watching the futures sell off a bit. This is again, the president's birthday, I think, is what we got going on. So the market's closed, but the futures are still selling. So on the index, like on the actual S&P index, if it were to open where it is trading right now, you'll see a gap on the actual index itself. So here's where the index closed on Friday, and you'd likely see a gap down for Monday
Yep.
based off of where we see the S&P futures. You can notice there's one extra candle here, and
You
it's
know,
trading
last
down today.
week, last week we showed the coronavirus dip, kiss, and down. Right, it dipped below the 200. It popped back above briefly and fell, and it's sad because it looks eerily more and more like that all the time. And I don't like being an alarmist. I think you're silly if you trade thinking too optimistically or too pessimistically. I think you stay even keel. With that
Yeah.
said, what what do you think a bigger threat is? A global pandemic or a financial meltdown pandemic? And I'll tell you, it looks like any like there's so many things that could tee that off. You mentioned the Ukraine when we were talking before. There's just a lot of things that can cause problems. So I think it's good that you're delta hedged.
Yeah, we've got a really nice delta hedge on the portfolio right now, which I put the initial delta. So I legged into it, Andy. What I did here is I put one leg on when the
Mm.
market initially broke down. Let me grab my drawing tool real quick here. I don't have that open. There we go. That should give me the ability to scribble on the screen here and highlight what we're talking about. So when the market initially broke down here below this support pivot and the 200 period moving average,
Right.
I put on one contract, and then it dropped and it had a good hedge, and then it rallied up and it went a little negative on the hedge, and then it started dropping again. And when it broke down below this candle here, this little signal candle, I'll call it, threw on the second leg just because it looked like this whatever rally they had going on here failed. And so when I watched that kind of come in with a little red candle up here, I put in a trigger there. And so as it dropped, we've got two contracts on now, and it shows a real. I mean, this is kind of these are huge positions, Andy. The amount of BP effect involved, and that's the P&L on the drop. And there's those two contracts, and what those give us is this little negative delta right here. But the S&P moves so much more than your average Dow stock or your Lowe's or your Prudential type stocks. Like, it just moves so much more than those. We use this beta weighting tool, and after I beta weight it, looks like I got to move that Moderna out to get it to calculate for me. You'll notice we're negative on that portion of the portfolio, and so it's we got a little bit bigger hedge on than we need. technically, and the profit and losses there. Those numbers look really, really good, and that's kind of steering us into the correction. And it's kind of, we've been whittling away at some of the drawdowns we took from the market initially correcting.
Yeah.
Yes, we're down. Well, we're still down year to date, but based off where we're at right now, we were down almost 30K at one point in time, and then we got it kind of whittled down to about 20K, and so we're still down for the year, just kind of dealing with this big market correction and some of the volatility. And some of the things that I've done, Andy, like I took some of our core positions like Apple and AMD and just some of these others, and just collared them, and I've left them collared and haven't really check out, AMD's stock's been dropping and getting rocked, and I've just got it collared, and we're neutral.
They're
And I
neutral.
and I and I just left the collar on Apple, and I haven't done anything. Even when the market started, like Apple started to rally, I just left the collar on and just kept the position neutral because I wasn't quite sure how the market was going to play out. I had to wait through their earnings announcement and just tried to keep those positions a little bit more neutral. Apple's got still some upside potential, but it's hedged to a certain degree with some calls and puts and a collar on it.
Yeah.
And so we've got that collared for the most part. And other than that, I've been kind of shifting gears towards working on credit spreads, which all have relatively low delta. Like when you actually look at most of these positions, like some of the deltas are bullish, some of them are bearish. There's a bearish delta with a negative number, there's a positive delta with a positive number, but most of the numbers are really small. Like they're not really big directional. We're focusing on the time decay, and so we've got the time decay working for us on all of these different credit spreads I've been working on. And this is rather than trying to predict which way the market's going to move day to day. We've been selling the way out of the money credit spreads and trying to generate some income and cash flow. And we've got some tidy little gains coming in on those and trying to manage the risk on those positions. But I think, with what I'm seeing on the S&P right now, I won't be surprised if we see some selling this week. And I'm guessing we'll see a short-lived sell cycle, and then probably a rally after that, and then the market will kind of reassess. I think the headlines are all reading kind of the market's worried about little extracurricular activity in the Ukraine is I think what the market's spook is. Yeah, so they're a little spooked just based off of that concern, and that makes
my concern.
Yeah. So and a lot of oil comes through there, so I'm pretty bullish on oil and that sector at the moment. And I think that's an interesting part of the market to watch for a bullish perspective. But take a look at the Nasdaq and some of the other sectors, like you can see that's down and maybe violating the support zone here. And those could be pretty bearish signals, and so I'm expecting a little bit of selling this week. We'll see. I mean, it's never a sure thing when you see that. I mean, the market could recover for whatever reason, but just on the onset, kind of looking at where we are at this point in time on it's the afternoon of the holiday before the market opens on Tuesday. I think that's kind of what we'll see. So
awesome stuff, man. We'll talk about some of that stuff. Will you go back to our monitor page and let's look at the delta and the theta? Do we have a total theta?
Well, we've got it kind of segmented right now. So this portion of the portfolio is 105. This portion of the portfolio is positive 13. This portion's positive 55. And then I have a handful of other positions that have pretty modest theta. And I've kind of broken it down into these categories where I've got different positions. Like I got a couple of risk-free adjusted spreads going on. Some of the energy stocks that I had panned out really, really well. So I've got a couple of risk-free spreads we've legged into that we can talk about. But overall, we've got net positive theta. So if I want to see like what everything is in total, I'd go to the old layout. Run down to the total. Our theta is 286. And that's above. We try to shoot for that 274, 275 number.
That's 100. Isn't it 270 something's 100,000 a year? I don't know what it is.
I don't know if you can still hear
But
me or not. Can you okay?
oh, did I pop out for a minute?
No, my Bluetooth for some reason just randomly disconnected. So
That's an interesting thing to call something Bluetooth. You invent this new technology and they're like, let's call it a Bluetooth. I've never seen anyone with Bluetooth, but hey,
yeah,
286 a day is pretty good. And the reason I thought I'd highlight that is we can't beta weight with the old layout because it doesn't show, but if you can get more neutral and cash flow, that's really cool. Some people might say, and this might be stating the obvious, but they say, well, if why not just sell everything? If you're nervous, want to go neutral, just sell everything you got. Well, you got to pay taxes sometimes when you sell stuff that you don't want to sell. And if you look at it from the price standpoint, yeah, you would be neutral price wise. But if you look at it from a cash flow standpoint, you'd be making nothing. And you'll notice that you were collared on Apple, but they paid a dividend over that time,
yeah,
right? And so
which is
the reason hedging and delta hedging is so important is it can give you a little bit of a chance to keep some of your cash flow running in, we hope, and you also get your dividends coming in because they're not so much worried about the stock price. So I just thought I'd see where our theta was because that's a pretty good feeling to look at our beta weighted theta or beta weighted delta.
Mhm.
And if we beta weight that and that takes down our delta to something that we can breathe with and feel good up and down with hedge wise, it's really that delta or that theta column that excites me. $286 a day.
Yeah.
It's
Well, and
more
that's
than the average person makes.
I think the idea of like collaring a stock during a time of volatility is a pretty cool concept.
Kind of a neat idea.
And with this market, like I've tried to keep my directional, try to read the technicals and anticipate the rally, anticipate the corrections. And this has been such a violent whipsaw.
Tough game.
It's been a really tough game. And there, like I was saying, I believe I mentioned this in our mentor club last week. The two ways to manage that are to get delta neutral, like go with non-directional strategies, and or shorten your time frame, and you have to kind of become more of a day trader because it's hard to predict which way the market's going. During more normal market trends, like you can see the market trending for weeks and weeks and weeks at a time in the same direction. That's a lot easier to keep an open position trade running while the market's running real strong. But when you're getting the market changing direction every 3-4 days, that's a little bit tougher to manage even swing trades on.
Kind of rough
And
downtrend in the Nasdaq. I mean, it's not. I mean, you could argue it's definitely a lower low, technically speaking, in detail and minutia. But you could say, well, it's kind of a double bottom after a double top. I don't know, but it's to me it looks like. I mean, it looks like storm clouds ahead. I don't know.
well, here's a little sell signal on the weekly chart. You got the MACD one line crossing down on a weekly. If both lines cross down on a weekly, I usually consider that a good sell signal from a broad market perspective, and it happens from time to time. On the weekly perspective, it's kind of violated some of the big weekly moving averages and key support resistance zones, so that you're seeing some selling pressure, but the sell-offs tend to be short-lived, and
yeah, like the VIX peaks tend to be short-lived. Like
right.
You can look at those peaks in the VIX, and the VIX is going to be climbing with that.
Oh yeah, absolutely. I mean, and even like a big scary bear market, where you get a big market correction like you did back in 2008. Those tend to last like 18 months on the high end, which is that's not nothing, but compared to the average secular bull market that lasts like 10 years, it's very short-lived to the downside for the most part. So VIX is creeping up. We see it at 27. I'm expecting to see a little bit of a pop on the VIX tomorrow.
Boy, it's hard not to bargain hunt, even with the. See, that's the greed in me. I just want to bargain hunt all the time, and I shouldn't.
Well, it comes in handy on average over time. It's one of those things you probably need to be a little bit careful with. But here there's one indicator I use. This is that archipelago indicator
Yeah.
where it tracks. And again, the archipelago clearing network is it's the largest electronic clearing network. And what that is, that's just the kind of the electronic backbone of the financial markets. It's where the transactions are occurring and clearing. And you have like your NASDAQ exchange and you have your New York Stock Exchange, and you have all these different exchanges there, and they call them electronic clearing networks. And the biggest of them all is the archipelago, which I believe has somewhere around 7,000 stocks on it. And what this tracks is all the stocks that are making new highs over the last 3 months versus the stocks that are making new lows over the last 3 months. And I try not to be super, super bearish. Like, oh, this is kind of how I think about it. And like you're talking about finding discounts all the time. And every time the market corrects, I feel the exact same temptation to want to pick up stuff on the cheap. But typically the way I'll do is like I'll find a stock I like, maybe it's a stock like Apple, and I'm just picking Apple out of a hat for no other reason than everybody knows what Apple is. And you see the stock price of Apple dropping, and so you kind of like the greed, and you kind of like, oh, I'm going to pick it up cheap. Well, while this indicator's still negative, I'll only sell like naked puts out of the money. Like I'll be like, yeah, I'll be happy to pick it up down here at this lower price until I see this turn green. Like I don't run out and buy Apple stock. I try to sell cash flow options, which is a less aggressive, kind of a less directional, like, you'd take a stock like Apple if you were interested in buying it, and rather than trying to predict where the bottom is on it right now and say I'm gonna buy Apple today, I go, well, it's dropping a little bit. It's not too far off the highs, but maybe I promised to buy Apple down at 150, like clear down here and say, that's a good price. Like that's down below support and resistance. And maybe there's a little bit of premium in there for the month of April. And I'll say, yeah, I'll buy it down here at 150 and they'll pay me 262. So that's kind of a cash flow position. It's not as aggressive. And I'm happy to sell like out of the money naked puts on stocks that I want to own when the market's giving us that kind of discount sale offer, because odds of probability are to find support and the little sell off will rally at some point in time, and I don't end up owning the stock anyway. But I'll wait till I get a little bit more bullish signal on the market before I actually buy the shares outright, because I have a hard time buying stocks when they're dropping, even though they're on discount. That's kind of a weird psychological twist.
No, but I mean, you can get a little greedy and buy too much. And the one guy who hasn't bought is Buffett. He's got a lot of cash on hand, and maybe he's waiting to deploy that capital at lower levels of value. So it is an interesting market.
It is.
Any specific trades you want to look at?
Well, let me show you some of the risk-free stuff. So whenever I got a couple of emails from students asking questions about what to expect from the stock market when they see headlines that are talking about potential conflict, like military conflict, so war. And that's a tough topic to grapple with. In the stock market, you think, well, maybe it shouldn't be doing so good, but sometimes it actually does okay. And it's kind of a question of, well, what sectors are going to be harmed by something like that, and what sectors are going to benefit from that activity. And typically, my first response is typically oil. So whenever you hear global conflict, particularly if it's like oil countries that produce oil, like Russia and China and the U.S. and the Middle East and all those different oil-rich countries, anytime you hear about that conflict in those areas, you think, well, that's probably going to affect oil production or oil availability. And so I go check out the oil futures, and sure enough, oil's been running pretty bullish. And while the market's getting scared and maybe your tech stocks are selling off a bit, your oil stocks are popping. And let me switch back to that new layout and show you I've had Callon Petroleum and Schlumberger, or Schlumberger, I don't know how you want to pronounce that. I honestly don't know.
I like the former because it sounds very
Well, it does. It sounds like you could shop at Target or you could shop
Yeah,
at Target.
Target.
Slumberger or Slumberger. Um,
Schlumberger. I'm going with that, dude.
yeah. So check out our little risk graph here on
Oh, those are
Slumberger.
pretty.
So this started out with a long call off of the pullback or so. I'm kind of expecting prices to rise, and I had to kind of sit and be patient on this one, waiting for this upper option to fill. So I bought the $40 calls for $3.25, and I tried to limit the expense to about 2,000 bucks,
Yeah.
which is I think that's the type of risk a lot of people can take comfortably.
Yeah.
And it took it several weeks for the prices to kind of chop, 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 and eventually pop. And last week, when it got that pop up, it sold a 42.50 call, different higher strike price, but I was able to pull 5 cents more than we spent in this case. And so I set the order for the same price to sell this higher strike price for the same price that we paid. So we spent the 325 and had about $2,000 risk for a couple, about 10 days or a week or 2 weeks or so.
Hmm.
And then it finally popped for us and was able to sell. And I just set a pending order good till cancel just to sell limit. And it was the next available strike price up, which when I bought at the time, I bought the long calls. And I can show you. Let me go back and actually put some dates to the actual trade here. Let's go with Schlumberger, two filled orders, trade history, boom. So the 7th to the 16th was the difference in time. So we bought the first contracts on the 7th and $40 calls, spent 325 on those, and just had a pending order, just waiting to get filled.
Hmm.
And it didn't get filled until the 16th when it popped up. And so you can go with, well, okay, on the 7th, that was, I believe, I'm guessing that was this pullback right in here. Let me get my crosshair.
Nice when that happened.
Yeah, it is. It is kind of nice. So let's go with the 7th is right here off of the pullback down into the 20 period moving average. And it popped a little bit on that day, but it didn't get filled until the 16th when it popped up. So it was, up, down, up, down, up, down, just kind of waiting for it to fill. And it sold those 42.50s for $3.30. So we got all of our initial risk capital back out. We don't have any money tied up in the trade. We even have $30 credit left over.
Hmm.
So we have a trade with no money in it and up to $1,530 upside potential. And so if the price of gas and petroleum gets more expensive and it costs more to fill the tank, we might have that increased expense covered. That's kind of the concept behind it. So that's kind of what I was thinking with that particular position. Did this same basic strategy on Callon Petroleum here, CPE, and this is just another petroleum stock that showed up in my scans. And this was one I was looking to pick
Wow,
up.
look at that.
Yeah, so a little bit more sideways,
Yeah, a
but
little
it
bit of
was,
a pennant almost.
yeah, but same thing. Oh, this is actually when we've got 200 shares of the stock, so I take that back. This is actually covered calls.
Hmm.
So that one's not a risk-free spread. I need to recategorize that one. Mosaic, basic, that's another risk-free, and then the consumer staples. I think I may have another fuel stock in here. I have to go kind of pick around in here. Look at
Pretty
those.
fun trades when
Yeah,
you risk
yeah.
briefing.
Well, it is a fun trade, and it's not. Exxon Mobil's one that we've just went long stock on. So Exxon Mobil's just a long stock, and
What do you think
difference
of
between.
Exxon's chart?
Oh, I
There
love
we.
the chart right now. This is what
I
I would
think you
consider
need
a
to
nice
sell.
bull flag.
I think I need to sell some puts like right now on ExxonMobil.
Yeah, it's a pretty chart.
Let's
So
do that. Let's look at some strikes for if a person wanted to sell naked puts on that, like me.
yeah,
This that.
how much time do you like to sell when you sell your puts?
Uh,
I'm usually between 30 to 45 days is kind of what
I
I
like
shoot.
the short. I like the short term because the decay is faster. I mean,
Yeah.
simply. And, it can move so much more in so much time. So I like short-term options when I sell them. And
Well,
I
we are
actually,
not. Go
well,
ahead.
are we
We're not
not
getting good quotes at the moment. This happens sometimes on a holiday weekend. You look at the bid ask spreads and the quotes, and typically, if that's the case, what I do is I'll just log out real quick and then log back into the platform.
what's interesting is I wanted to see if it was different between the paper trade and the live, and they might be doing some work on the holiday weekend because
That happens. Yeah.
I got the same thing on my live quotes or on my live account.
Well, even in the live account, if ever I see that, I log out, log back in just to see if they've got.
Let's see what happens.
Yep. So I don't know if that'll work or not.
But yeah, interesting stuff. We'll see. But I like, it's kind of interesting. ExxonMobil is something I've owned a lot of for a long time, and part of the issue I have with it is just long term. I see all the electric vehicles and all the electric and all that, but I'll tell you, there's a lot of we're still pretty oil dependent, and
Without a doubt. Yep. So they did. No, it looks like some of them, not all of them. Yeah. So we still have some. So whenever you see this is again, usually you'll see this on weekends and commonly on like a holiday weekend if they're going to do that. You're just seeing some quotes missing. So those will eventually show up, and typically I would probably want to be out of the money on those. Like you could take the 70 strike for example. You could probably pull 70 cents out of that, and that's 1% on a naked put. If you could sell that for 70 cents, and depending on what your margin requirement is, I mean, this is not, people don't get too excited about the idea of making $70. But when you look at the margin requirement and they only want 8, and that's a 10% margin ballpark. If you're trying to hold cash for that, you'd probably have to have 7K. So you'd be getting 1% on the money. But if you're using margin, you're getting close to 10% on the money. And so it's a different way of thinking about it is whether you're doing it from a cash secured put perspective in like an IRA type account. And that's, that 1% still, I think, for a cash secured put, I'm typically looking for 1% to 2% on the high end. Like that, you're lucky if you get anything beyond like 1.5% on a cash secured, like out of the money put where you go way out of the money with low deltas. If you don't mind owning it, you could be somewhat more aggressive and say, I'll take it at a higher price, and you could probably get paid a little bit more. I don't see good bid-ask spread quotes there, but with this bull flag, 75 would be an aggressive bid-ask, 75 versus coming down here to the 70. That's saying you'd like to own it down here at that moving average. But I see pressure on energy staying strong. And
that's back to the original email of what tends to do well in conflict. There you go. And what are some other
I'll look at like defense sector stocks, like Lockheed Martin. That looks like it's got a nice bull breakout there. You'd want to see it take out the ceiling here. Like Raytheon type stocks, like that's the other thing I'll go to is just look at those defense sector stocks. And
to get data,
it's not popping up, but they've got so many
ETF.
There probably is.
I'm going to Google that. Keep trying to get data, and I'll see if there is. It'd be interesting to see what it is. Aerospace and Defense ETF list. Here we are. And pretty small. We have any market caps that are there? ITA is the iShares one.
ITA.
And XAR is the Spiders S&P Aerospace one. And those both have billion-dollar market caps, or total assets, I should say, would be a better way to put it. Total assets over a billion. ITA has 2.5 billion, and XAR has a billion, just over a billion. But it'd be interesting. I would go to Yahoo Finance first and see what they hold, or maybe I can click on them here and see what they hold. They're looking at these as let's look at the iShares.
What's the symbol?
The iShares is, now that I clicked on it, the iShares is ITA. And where are their holdings?
What are their holdings?
That's what I'm trying to find. Here we go, holdings. Raytheon, Boeing, Lockheed Martin, top three. We just mentioned those. Remember this, Northrop Grumman.
Oh, yeah.
General Dynamics.
So I like the Northrop chart.
I haven't heard some of these names in a while. They haven't come up. General Dynamics is something we've traded, I believe, once or twice.
Yeah. So out of all the charts that I've looked at thus far, the one that really popped out is the General Dynamics because it's breaking to a new high.
Yeah. General Dynamics, Howmet Aerospace, L3 Harris Technologies, Textron, Axion Enterprises, and after that, but they got 22%. Like, here's what's interesting is 22% of the assets in that ETF is Raytheon. Boeing is 18. So you have, half, not quite, but 40% of that ETF is two companies. That's interesting. That's a lot of weight, where half of it is on Raytheon and Boeing. And then your Northrop Grumman, Lockheed Martin, General Dynamics, those are all 4%. Lockheed's 5%, Northrop Grumman is 4.79%, General Dynamics is 4.6%. And so it's almost like it got tiers of, these 4%, and then it just drops like a rock with these lower weighted ones. But anyway, you could look at that and trade the ETF if you thought. I don't know if the ETF has a real.
Well, and I just ran a FinViz scan for all the aerospace and defense stocks trading above all their moving averages. So just said, give me all the big stocks with lots of volume on them.
Over 50 bucks.
Yeah, and so over $50 it traded 1 million shares, and General Dynamics, Raytheon, and Spirit Aerosystems came up. But the Raytheon chart's not too bad. It looks like a nice little pull back into support. And that's, you could probably pull off just about any strategy on that. And then I really like that General Dynamics chart with the potential breakout. And so, these are the types of stocks where I'd look at that and
it depends on what you want to do. They've got what, a $4 and something dividend a year. I can't read that. I gotta get my glass on. Is that one?
Yeah, it's $1.19 is what that says.
$1.19. So $1.20 times 4 is you're just shy of $5. What is that, 480 for a dividend on $200 stock? So it's not going to make you rich overnight dividend, but it does pay one. And then we look at what the options are on it and see.
Yeah, this would be if I was thinking about just an option strategy on this. I actually have a position on General Dynamics. Apparently, I've got a butterfly on it, which makes sense because what I was sitting. This is really sad, Andy. I forgot I had a position on General Dynamics.
You are getting old, Noah.
I know I am, but what I was thinking before I realized I had a position on? I'm like, ooh, this would be a good candidate for a butterfly. Least I'm consistent.
That's really bad, though. It's one thing to forget you have, but one thing to say, hey, let's make her a good butterfly. Look at that.
Yeah. So this is, and the idea behind the butterfly is, well, yeah, I like the stock. I like the breakout. And Andy's thinking, well, it pays a dividend. Andy's thinking stock ownership. Yeah. Which is definitely investor mindset, investor temperament. And I'm thinking, how could I trade this for cheap?
What I love about this is look at where the standard deviation is and where your profit potential, levels off.
Oh yeah.
That's not a bad place to have it, because it's probably not going to go much further than that. And so why not sell those calls? Bring in premium, have help your cost basis out a little bit, so you're not paying for infinite potential when it's probably not going to go to infinity, right?
Right. So, and this is a trade I believe I put on, if I were to look back at when I placed this one, General Dynamics. Let's see if it'll.
What a good question by the member, the defense, because I like that line of thinking.
Well, it's an interesting question to ask. So this is one we put on Little Butterfly back on the 24th. So a couple of weeks back, and it was the same concept. Like I thought it was going to break out. There was the new kind of rumor of the conflict going on out there, and I got the question, well, what does that mean? And usually I'll ask myself, well, okay, what's the conflict about? And it's usually about some sort of resource, and probably the most common resource for these types of conflicts is oil. And there are quite a few pipelines that go through the area, and it's a shipping port, and so I mean a lot of things move through there. And they do have like lithium mines and things of that nature, I believe. Like this is what I'll kind of go look at what like their chief exports are. Like if anytime I hear a country come up on the radar like that, what are their chief exports? And I'll go look at it from that perspective and kind of get an idea. And so, anytime I hear conflict in general, my first thought's oil. And then second thought is, well, that's probably going to make those defense contractors rich. So that's kind of where I looked at. Those were the first two places I looked. And, I know a lot of people out there, Andy, don't necessarily want to put their money into that stock. Like they I don't know if that's a conversation we want to have or not, but some people like to invest in companies they like from like an ethical, moral standpoint. Like they like to invest in green energy because it makes them feel good about what they're putting their money, things of that nature. And sure. I like to invest where I can make money, and that's an interesting conversation to have. And I think it's just one of those things where I kind of look at what the market's doing and try to follow, well, what are the sectors showing? What do I see on the sector ETFs? Where can I find prices moving?
Right. Well, so, I like Exxon for a buy on the dip, and I like it a lot for some puts to get paid to buy it on it. And it's not that big of a dip. I just think I like that trade a lot. I like the thinking of defense. Should we look at our Bitcoin stuff? Bitcoin's gotten its butt kicked.
I haven't not. By all means, let's check it out. So
on that. Let me get my screen. My screen looks like huge now. I forgot to adjust it, but it's like my eyes are so bad. I was messing around with it now. Like my screen looks like it's got a resolution for like 1997 or something like that. Like
you'll have to show me how you did that, because I tell you what,
pretty big, right? It's not too impressive actually right now. Can I make this smaller? No. Can't even make the thing smaller here. Maybe a little bit there. That's a little bit.
I don't see your screen yet if you're sharing it. So
I was going to get all prepared first before I share the screen and try to get my let's see, where's my am I a panelist, or how do I?
You are an organizer, so you should be able to.
How come I can't see my GoToMeeting stuff? GoToMeeting. I cannot see it, Noah. I'm going crazy. Oh, here we go. Now I found it. I found me. I forget GoToMeeting, GoToWebinar are different, so I always get screwed up on this. I'm going to make me the presenter, and we're going to do this one. So we do things in a paper trade account and stock. They don't really have a good platform I like for crypto stuff, so this is live stuff, just in disclosure. And we spent we're down about $7,000 in this account from when we started, which is pretty good considering we bought Bitcoin at 55,000 and Ethereum at 3,500. So to only be down, in fact, that's almost 50. So we're really only down about $6,000 is just thrilling to me. Think about that. It's gone from 55,000 when we bought it down to 37. What is that in terms of loss? Well, 40 is 15 grand, right?
Yeah.
And then we got, so $18,000 we've lost in that. And then we have some Ethereum we bought around 3,600, some at 3, some at 4. That's kind of been all over the place. But it's like we're going to buy some at 4 or 3. Looks like we're going to buy some at 3. But anyway, let's look at the Bitcoin first. Really happy with this trade right here. $1,700 of cash flow brought in, and that's part of the reason we're not down as far. Is if you're bringing in 700, 800, 9,000, 2,000. It's been all over the place. We've got as much as 2,600 for the calls and as much as 500 for the calls that we've sold. I think we'll go for about, I don't know. I'm really tempted to buy these back because out here, maybe we go the 45s. Now that's $10,000 less than what we bought it for. So we'd be selling at 10,000 less. But if I can get paid $800, and I think of all the premium, I mean, if this goes back up from 37 to 45, that's quite a windfall there from where it is now, 37,045. That'd be $8,000, and it'd put us back in the green here. So here's the misery of it, Noah. If we look at a Bitcoin chart, maybe I should bring up a chart. Let's detach this and let's look at the technical analysis on it. What is it, /BTC? Is that what it is?
Mm-hmm. Yeah.
Okay. We do feel like I felt strongly, there's a pretty good floor right here. So it would be nice to see if it gives us a bounce off some of this old resistance, new support. Pretty steep drop. If you get a bounce, I'd rather wait and sell the calls at 50,000 than 40 from where it is, or 45 rather. I'd rather sell them at 50 than 45. But even here, we've got resistance at 45. So part of it is this: when you get into this type of stuff, I like a bird in the hand better than two in the bush. I mean, I bet you Noah and I would probably differ on this. Noah, I would think, would wait for the bounce, and he'd be smarter, and he'd wait for the bounce, and then he'd sell at 50 or 55 and bring in cash, clear up here. We wouldn't have to get called out. I'm tempted to just take some money right now because I don't know where it's going to go. I don't have the confidence where it's going to go. MACD's starting to cross over here, not too good. What's your technical analysis on this?
Well, it's got that lower high, which kind of gives it a bearish sentiment at the current. So that lower high, yeah. And so that and it's nearing a big support zone. So you got lots of support at 35,000 and 30,000.
Yeah.
And the buyers may step up in there, but you do have that resistance pivot. So if I could sell a call out above the resistance, that's fine. And worst case scenario, you get called out and you buy it back.
Get back in. Exactly.
Yeah. So exactly. So I have no problem with the cash flow position, especially when I see prices moving down. That is, if it's an asset I'm trying to protect, that's where I like to sell the covered calls. And if I wanted to get more defensive on the drop, like I was trying to protect capital and prevent drawdowns, I might even sell at the money or near the money to give us a little bit bigger premium. But if I'm just trying to generate some cash flow and I'm not too worried about the asset price fluctuating, I'd sell out above that resistance if I could.
Well, I like all of those things, and you could also try to collar this. I mean, all of the options, strategies are available here within reason. The problem is a lot of these don't let you trade on margin. You actually got to back it with coin or back it with cash full. So right now we can buy this back. What's it going for here? If we put this in here, what are the recent trades? $21, $17, $10. Someone bid for $3 on a little tiny contract here, and that's something. So that's the recent trade. So if I said the mid is at 12, and I said, well, I'll sell this at 12, that's pretty good to bring in $1,700. You know what? And then you're buying it back for almost nothing. So what do you think? And then what we could do, that would release us of our obligations here. And then, there's not much money in the 50s, but I like this 700 for the 45s. That's a little below your resistance that you wanted. It's not quite above it, but it's in the ballpark of it.
Yeah, well, it's higher than the current price, and that certainly works. So
I don't know how fast we get filled on something like this, but if we work to close the position, okay, and we'll see if they bite on that, and if they do, then I'll go back in and I'll sell some at 45. See if I can pick up on here. There's a couple of, there's a 900 a couple of days ago, or a day or so ago. So 7 to 900, a lot of 700s in here. People have bitten on. So if I can get 7 and change, 750 maybe, right? That guy got a nice one. But not a lot of liquidity, huh? That's been the issue with this.
well, I think the liquidity is actually it's getting better. I mean, I'm seeing more contracts than we did
Yeah,
when we first started this, so it is
Still not
improving.
still not like stocks, but
No, of course
yeah.
not. But
So we'll leave that open order in there, and we're definitely on the bottom part of this at 12 to get at 12. I mean, I guess if we really wanted out, for the purposes of teaching, let's just get out. What do you think? For the purposes of teaching, I hate that, but that's okay. For the purposes of teaching, let's go with, what do you think we can get for that? I mean, we got a lot to unload here. Let's give them what they want. I really don't care that much about the price. So if I bring in $1,700, I'm only paying that back. I can live with that. So let's see if they even bite on that. They might not even bite on that. We shall
order
see.
successful, pending. There you go.
68 of 100. 68 of 100. Now we've got close in progress. So we'll see. So I'll try to get some of that. Now what I could do is start selling. I don't want to do it for simplicity's sake, but I could actually take the stuff that's not locked up. See, I got 0.68 Bitcoin. I still got 0.32 locked up because they changed. Look, now they're asking 49 bucks. Everyone's mad at me because it was $12 to 21. Now the 21 instead of the top is the bottom that quick. What a cut. But I still have 6.8, so I could actually go here and I could do this. What the heck? I could hit that, and I could say the number of contracts is 68 of them, right? I could do that much, and then say I want, what do you think? 750, between 760, something like that. What do you think, Noah?
Yeah, I think you can split that. What's the 750? I think you should
I mean, it's
pull
on
that
the
off.
bottom half of the bottom half of
Seven, and I don't know what's does it have like a $10 increment or a $5 increment? Is there a
I don't think there is. I think you can do whatever I want. 772 is down here.
yeah? So 755 is about halfway. So if you could go, maybe that's
Right.
depends on how bad you want to get filled, really.
Yeah, really. So we'll look to sell that short, and that'll sit in there, and 0.68 there. And no one's really biting on this anymore here. So I kind of made everyone mad there. Then let's see, go to Ethereum. And the Ethereum position, we have two. This one kind of isn't my favorite because we're, not too bad. We're about $500 down, but we have collected so much premium over time on this, way a lot of premium. We got $225 out of this, but we've had, $400 ones. We've had, some pretty good ones. This one completely dominated right here. We could buy these back for very little. I mean, we got $240 in, and we can buy it back for very little. But I think I'll let these go. That's only a few more days, and it'll give us something to do next week. What do you think? Let these go. Let them expire. So what's going to be cool is we're going to pick up another Ethereum here. So that'll be 4 Ethereum. So just to kind of go big picture on it, this has been I'm like I have to like, I don't like saying bad things about Bitcoin too much because I respect my mentor, Robert Kiyosaki, so much. And he is definitely a Bitcoin fan, but he's a Bitcoin fan for different reasons than I think people think. I think when he says, I love gold and Bitcoin, people think capital gain, where he's thinking hedge. He's thinking protection. He's thinking the dollar is awful, if that makes sense.
Yeah.
Does
No, that makes a lot of sense. I think.
know. And so what I'm doing with it is I'm not holding, I'm doing something different. I'm cash flowing, and it kind of, it kind of makes me crazy that way. See how my big font, how big my toolbar just got, because
I
my
like it.
screen is big. So let's just kind of, I don't like this as a Bitcoin lesson. I like this as a financial education lesson. But where we started off is we started off with $56,000, and so we bought one Bitcoin is what we had. We had $1,000 extra of cash in there, like that. So one Bitcoin, $1,000 of cash, and we had no income coming in. We actually started with $56,000 of cash, and our total, with the one Bitcoin we bought at 55,000, and that we have 56K total in the asset column. That's what we had. Okay, now doing what we're doing, and this is where Bitcoin's chart, wherever it was at 55K, right? Where Bitcoin's chart was at 55K. Okay, now Bitcoin's chart is down from 55K all the way down to 37, was it? I want to say. So
Yeah.
quite a drop in the chart. So one would think, well, what a crappy idea. You went and bought some Bitcoin at 55 and now it's down here, right? Well, let's slow down and hold our horses. What we've done is we've taken the Bitcoin and we've sold options on it, right? We've sold for premium. So now we have income every month that we've brought in. Income's coming in every month. We don't have any debt in this trade. We bought everything with cash. Now we have a Bitcoin, which is a machine that can make money. And we're going to have 4 Ethereum, which are all machines that make money. So look, now we got 4 boxes out here with cranks on them, 4 of them. I'm making really bad boxes right now. And all of these now, where we had none with 55,000 cash, now we have cash flow boxes. Every single, the Bitcoin can crank out money. Each of these Ethereums can crank out money. And we have, what did I say? The account was at 49,000 something. 49, oh, it's gone down a couple $100 since we talked. 49. So that means if we started with 56, we're down about 7,500. Is that right, Noah?
56,500, somewhere in that ballpark, right?
500. So yeah, we're down $6,000. Bitcoin alone, though, was down. What is that? 18,000. Is that right? 55 to 45 is 10 minus another 8 is 18,000. So to only be down, so when Bitcoin's down 18,000, and if the Ethereums we bought were at 3,500 on average, I would say, so they're down quite a bit. I'm thrilled with where this is. I'm absolutely thrilled because I can stomach that. Think of the dudes that bought Bitcoin at 55 and have held it. They've got a lot of pain. I mean, think about how far of a drop that is. 55 to 37 is a pretty good drop.
Oh yeah.
What I'm excited is this. What I like is these machines, we're just going to keep adding more of them. I'm going to keep using the premiums from Bitcoin to buy more Ethereum. So we'll have more asset than we did before. But what's more important is this $56,000, what earning potential is in that? Here I put it to work, in a savings account, that's not going to earn a lot. So I'm putting it to work here, and I can keep doing this over and over. And I believe that someday our cost basis will be down to Zipporama. I believe we'll get all our money we put in. I think I'll get the whole 55 grand back out because we've already gotten a lot of it back. That's why we're only
That's a
down.
pretty cool concept if you just
It's
The-
not about Bitcoin. It makes me crazy. I'm so sick of Bitcoin. I'm sorry to rant. The reason I'm doing Bitcoin is because people have asked for it, and they say, "What would you do?" Like they go, "Are you trading Bitcoin?" I go, "Well, I have some for hedge. That's it. I just hold it and it sits there. It's like my gold. That's it." They go, "But if you did trade, how would you do it?" So we did a couple of webinars. They were very well attended. But the thing I was hoping is once people get into this, yeah, maybe we're helping you with your Bitcoin, maybe we're not. But the concept, the financial education concept of turning cash into boxes that cash flow that can eventually pay for itself. Whatever price tags were on these, right? I mean, think of the money we've spent with the premiums we've gotten. Whatever price tags were on these, let's get a red price tag. This had a $55,000 price tag on it. This had a $3,600 price tag on it. I believe this one had a $3,000 price tag on it. I think this one had a $3,000 price tag on it. And I think the fourth one that's going to come, so we're going to actually get another one right here because we got three. We're going to get a fourth one, and it's going to have a $4,000 price tag on it. And we're ready to pay that $4,000. I mean, it's sitting there ready to pay. So it's got a $4,000 price tag on it. And Bitcoin is sitting at 56 and Ethereum sitting at 2.5K. And we've paid higher. We've paid 55, 36, 36, 36, and 4. We've paid a higher amount of money, a larger amount of money than either of these are. And yet we're still sitting pretty because of all the cash flow. And we've expanded the amount of asset that we have. So I'm very proud of what we've been able to do in a simple way. That's probably what I'm most proud about is, it's renting covered calls isn't anything to be, incredibly patting yourself on the back for. But what I like is that we made it simple. And one more rant and then I'll shut up, okay? I've been trying to be more quiet this Mentor Club, but I'm failing now. What makes me just crazy is I have a good buddy who never wants to touch stocks, touch stocks. And when I showed him this, he's like, "This is the coolest thing I've ever seen. This is amazing." And I'm like, "Well, you know what? You could actually do this on stocks with better spreads, okay? Maybe some not quite as good a premiums, but a lot better spreads, a lot less volatility, and that little Jack in the Box, those Jack in the Boxes I was showing there. Can I get that back? These not only pay out premium, but if you have a stock, what can you add to this? Well, you could also add a dividend plus the premium. So I don't know why people are like, I don't think people know what stocks are, Noah. I think they think, well, they're little pieces of paper. No, your deed is a little pieces of paper. It kills me that people say, well, I like real estate because you can see, touch, and feel it. And you can't do that. You can't see, touch, and feel the stock. Oh, yeah? Go in your refrigerator and just touch the stocks that are in your fridge right now. Go down in your garage and touch the stuff that is there. And go to your computer and touch the Apple computer. Go to Seattle and see their freaking size of their building and go touch it. Go to Atlanta, Georgia and see the size of the building that says Coca-Cola on the top of it. Why are people not excited about owning companies? The reason Warren Buffett doesn't like gold is because it doesn't serve anybody or do anything. You dig a hole and you pull it out of the ground, and you pay.
And then you stick it. Yeah, you stick it another place to.
Then you go to Fort Knox in Kentucky, and what is that? That's a hole, and you bury it in that hole, and you put a fence around it and pay someone to guard it, and it sits there. It doesn't answer anyone's phone. It doesn't stream movies. It doesn't, make your tummy feel yummy when you put that Heinz ketchup on those Ore-Ida French fries and eat that Oscar Mayer wiener, right? Those are all companies that are producing things to make our lives better on a daily basis. So anyway, I on a bit of a rant there because people, oh, this Bitcoin is the coolest thing I've ever seen. You're gonna go out and you can make $700, right? We're gonna go make $700 on this thing, right? Where is it? Edit the order. We're gonna make $755, and real estate that'd be tough to touch. I like real estate better because you could use debt, but the way this would work real estate wise is you put $55,000 down on the house that you bought, and then you're financing, maybe 200,000 for a $250,000 home. Your payment on this is probably, I don't know, probably what, maybe $1,300, whatever. The rent you're bringing in is maybe $1,800 on a home that small. I mean, I got a house that's worth about, one of my rentals is probably up to about 600,000 now, and I'm only getting about 2,300 for it or whatever it is, a couple $1,000. So your cash flow here is $500 a month. We got 1,700 on our Bitcoin last month, hoping for 755. We've got as much as 2,600. I mean, if you get one of those at 2,600, that's a lot of months in real estate to get that. So I'm not saying I like real estate better because you can use debt over here, right? But that's your down payment. I guess what I'm trying to teach is for the new guys, like let's say you're in one of the webinars last week and we said, hey, come to Mentor Club. You probably won't understand much your first day, but if you can start getting that's what I'm good at, is teaching basic general ways to think about assets. I think I'm good at it. I don't know if I'm a good teacher or not, but
I think you're pretty good at it.
I think you're good at it. So anyway, that's the Bitcoin stuff. And I mean, think about that. Your Bitcoin chart looks like this, and I'm happy. It's gone from 70 grand down to 36. It's basically been cut in half. And I'm happy. I'm thrilled with it because I'm looking at a cash flow perspective. I'll always have those boxes. As long as there's an options market, I can make money on the Bitcoin, as long as there's an options market. So pretty cool stuff.
It is really cool stuff. I enjoy learning about it, and I think it's a fun discussion in general.
It is
it's a different way of thinking about it, because I see lots and lots of people, speculating on the prices and talking about the technicals and talking about support zones and resistance zones, which I pay attention to, but I love the just changing it from a capital gain speculation on prices going up and down into a cash flow instrument. That's so powerful.
When Noah talks about that, a little lesson for the newbies, okay? And those that have heard this before, it's still okay to have this lesson. When you go through your 4 Pillars of Investing course, you'll see lots of financial statements for you new guys, lots of them, because we always want to give a lot of love to our new guys and our established guys. Notice I didn't say old guys, because that's me. I'm an old guy. Noah's old because he can't remember what trades he's done butterflies on until he's so we know that. We know Noah knows.
It's true. That's true.
Noah's old. I'm even older. So if Noah's old, I'm ancient, man. That's brutal. But really, what you want to do is think of it this way: is you have an asset here, whatever it is, right? An asset here that spits off cash, and what that does is that increases your cash flow, and that increases your quality of life, because the expenses have to be fed. And so that's good stuff, right? That's good stuff. Okay, the second type of asset you might have is going up and down in value. This is your gold, this is your Bitcoin. Asset minus liability is net worth. And you're going to see your net worth go up and down based on this. So if you had to choose which you wanted to retire on, which one would you want? Well, this is a 401k. It's exactly what a 401k is. It goes up and down and up and down. And when the market does crappy, you look at it and you think, we're doing crappy. And when people say, I think I'll retire, well, they say, well, we're draining these assets. We have to sell assets, right? We have to sell assets to come this way. So instead of producing new income, this is a golden goose over here. Okay, this is a golden goose over here. He looks very angry. Let's make him happy. Right now he looks sinister. That doesn't even look like a goose. What does that look like?
It looks like one of the. Well, now you're changing the drawing. There you go.
I want to make my goose happy. How about that? Is that a happy goose?
That is a happy goose.
That looks like a velociraptor that just smoked a cigarette. Okay. That's a golden goose. This is a golden egg. Like gold, this is an old golden egg. It sits there and goes up and down. This is a producer. This just sits there. Golden goose can make more golden eggs. Golden egg does not make more golden eggs. The golden egg just changes in price. Okay. The third thing you can have in your asset column is a little teeter-totter like this. And you say, I am concerned about my net worth going up and down, right? Assets minus liabilities is net worth. And I would my net worth to stay steady. I don't like this volatility up and down. I like the steady net worth. Like right now, we've delta hedged for this reason. We're balancing one asset against another. This is called hedging. So you take one asset like a dollar, right? And you put a Bitcoin on the other side of it. And if the dollar goes down, hopefully the Bitcoin goes up and you maintain something. Or in Noah's case, we have some stocks. We have some stocks and we have some short futures on this side. So for positive stock, we short future. And right now, to the degree this, what's our delta?
Hedged, it's about 3,000 and change. So
Perfectly balanced would be 0, and we're hedged positive 3,000 or negative 3,000 after the hedge.
we're positive 3,000, but when you beta weighted it, it has a negative. So we're actually a touch bearish at the moment.
So we're probably, if 0 was perfectly still, maybe we're like a 36 or something, right? And without the hedge, it's like a 5,000 to the plus side, right?
Right. So yeah.
So what's interesting is, in my opinion, this is most people in their mindset and their investing. Like people that watch CNBC, if I say, okay, Lockheed Martin, they go, oh, we think it's going up. We think it's going up. Facebook, oh, we think it's going down. Everyone hates Zuckerberg now, and they're losing the children, right? They're losing the younger generation. Most people, when they think about Bitcoin, price up, price down. What we're trying to do at the Cash Flow Academy is, we'll teach you this one, but this is really, I think what is exciting is, how do you buy assets that produce cash instead of just trying to buy what's going up or avoid what's going down? And the problem with the golden goose is you also need a crystal ball much more to do this one. This you don't need a crystal ball for, because you do this anyway. It's insurance. Yep. Like you don't need a crystal ball to buy home insurance. Your house might burn down, it might not, but you're going to buy insurance either way because you don't have a crystal ball. If you had a crystal ball, you wouldn't need insurance, right? And over here, I don't know whether it's going to go up or down, but I feel more confident, not totally confident, more confident that someone's going to pay the rent, or that Coca-Cola is going to pay the dividend, or I can get some premium for my Bitcoin. I don't know how premiums been up and down a lot more. The rents and the dividends are a lot more stable than premiums are. But in any event, I still believe I have boxes that I can generate cash from. So that's why the reason I like what we do with Bitcoin is that hopefully people are checking this box saying, oh, this is really cool to think this way. And no matter what the price is on this box that I bought, eventually it will pay for itself. It's only a matter of time. Now, obviously, I'd like to have it happen in my freaking lifetime, and preferably in a few years. But even if I put it in a family trust, eventually the cash flow pays for it. It's only if the cash flow dies that my cash flow dies. It's only the dividend stops, they stop paying rent, right? They get rid of options on Bitcoins, stuff like that. So there's my little basic financial education. There's 3 different ways you can look at your asset column. Does it cash flow? Is it going up and down as a capital gain, or is it a hedge? And we did these 2 today. We did the income and the hedge. We did these 2 right there. So now that's a big mess. I tried to draw a goose. There you go. How do you draw a goose, man? That looks like does that make it have a beak? That's a little.
I see it. Yeah, I see the goose there. It might be an ostrich. I don't know.
Oh, that's a big egg. That'd be a big golden egg. How come there's no?
Wouldn't it?
That's. I don't want a goose that lays a golden egg. I want an ostrich.
There you go.
That's not. I want a velociraptor with my golden egg, man. Come on. What are you talking about? Oh my gosh, dude. Every time someone says something funny, they're like, Man, that's something Noah would say. I'm like, what about me? Am I chopped liver? Apparently no.
Yeah, I think
I'm
you're a pretty funny guy.
I want an ostrich to lay my, I want to make Noah the presenter. Get me off. Yeah, we got to get Noah as the presenter. Okay.
Oh, there we go.
Fun Mentor Club, dude. I love hanging out with you. So much
Oh,
fun.
it's always a good time. Always fun stuff to talk about. So I
I
think, from where we're at with the market, that was awesome conversation on the Bitcoin. Still looking at the energy sector for any bullishness. Other than that, I think we need to be careful with the rest of the broad market because the sentiment seems to be bearish at the moment, which I don't know how long that type of sentiment lasts, but it's a good ability to take, to be able to own those assets that you can cash flow on and then defend them with hedges. I mean, that's kind of the big takeaway every week, isn't it?
Yep,
Yep.
it is. That's the takeaway. All right.
Okay.
Well, with that, I'm going to take myself away and everyone enjoy the week. We thank Noah so much. And oh, by the way, thank everyone for their comments, man. You guys have sent the most touching, heartfelt, awesome messages about what is going on with your life, with what Noah's taught and Corey has taught and what the Cashflow Academy has done. That's like better than anything. Like that's better than Christmas presents and it's better than a great, like it's the best. So thank you when you send those in. We don't publish that stuff, if you'll notice. I mean, if someone says, hey, this may be simple, we might ask permission to publish that, but most of the money stuff we keep really private. And
Yeah.
we're just grateful for everyone. When they participate in the Cashflow Academy, it helps us grow and it helps us help more people. And we hope you feel like you're part of our family because you are. So thank you. Okay.
Thank you.
Awesome.
All right. Have a great week.
We'll see you.